Hey, we're live.
Hey.
November 21st, 2024. And just a heads up, I've had a horrible cold the last week. So from time to time, I might just mute and let Richard talk so I don't cough too much. But everything should be okay. Hey, what a day. What a day.
There was me thinking my 96K calls were just going to go out quietly.
Yeah, and, perfectly safe, didn't it? Perfectly safe.
Oh, I even as a precaution rolled some 96s to 97s for Saturday, and they're in the money as well.
As $1,000 as a precaution in Bitcoin.
Yeah.
Well, yeah. Mad? Yeah, that's crazy stuff. Anyways, hey, welcome everyone, and welcome all the new people. Let's take a look here. Giandrea, great to see you. Yeah. All-time high. What a crazy time. Vladimir, 100K here to come. Yeah, I mean we're pretty darn close. We just had a little pullback, but I think went up to 98 and change or something.
Maybe an hour. We had a little sniff up at 98,400. Yeah, this morning. 98,428 to make it.
But, and anyone new to our little show we do here Thursday where we talk nonsense and Bitcoin, check out the chat. You can save 10% on Deribit fees if you don't already have an account.
Actually, while you're doing that, I'm going to share my screen and just show. I'm going to show you the vol surface at the moment because it's so interesting, right?
You weren't going to steal my thunder, were you?
Surely, you don't think that?
No, and stop calling me Shirley.
Okay. I don't know if anyone on this show is old enough to remember the Airplane, 1977. Probably one of the best films ever made.
Classic comedy.
Right. So this is the price action and vol over the last 24 hours. And here's the price action and vol over the last week, 5 days. And here's over the last month. So we're getting back up to pre-election vol. Market is marching ahead post in euphoric celebration of the collapse of the US empire. And look at this. What I really wanted to kind of show you was this skew. This is looking at the implied vols at each strike, and our heads are in the way actually. But under this, okay, you can see it on the little popover. So, where are we? This is at the monies are here. So 68 vol, which is quite high. And 1 week is higher. And an area of the vol surface I look at quite a lot is up at the 10 to 15 delta rate range. That tells me a lot about the stress in the market and what people are doing. And what this is kind of telling me is we've got funding rates at 7 basis points per 8 hours, which is enormous amounts of interest that you've got to pay. So if you're long perps, for goodness sake, go and buy some September next year futures and sell your perps.
Save yourself the interest.
Otherwise, you're just going to get wiped out in interest bills. So what this is telling me is that there's been a bunch of people who are short calls and they're being forced to buy them back across all tenors. And a whole bunch of degens are selling puts behind the rally because
a lot of put selling.
The put premium, the put vol is actually lower than the at the money. And this is, I think, a bit of a dangerous sign. Now, I know that there's a whole euphoric, macro about all this, but when people just start selling naked puts behind a rally,
look out.
It will go, and there will be a liquidation event. And actually, on that note, I haven't checked the liquidation map this morning, but
and if they're selling it hard, and they push the price of puts down, what a great time to buy them.
Yeah. So actually, what I'm doing on my systematic books, I don't mind telling you, is that as we rally up, I'm rolling calls and buying futures and all that stuff that we do, and I'm buying risk reversals in the sense that I'm selling calls and buying puts. But I'm doing that out in January to 2 months, selling the $30 call and buying the $30 put, just in small size, just building up a little bit every day, just for when this does break, that we don't get murdered. Actually, I mean, well, there's no liquidation levels above us for today.
That's 24-hour chart you're looking at.
24-hour, yeah. I mean, look at a week, I guess.
Yeah.
I mean,
Yeah, well, where are people rolling to? I bet you a lot of people probably rolling to the 6th of December, the end of the month, of course.
Yeah. But I mean, at these vols, I mean, you kind of want to roll out to wherever the vol is, don't you? If I stop sharing that and share my Rogue Trader screen.
And just while Richard's doing that, I'll just remind people that this, of course, is an interactive chat or broadcast for those that are new. And in the chat, ask us questions. If you got questions or Q&A section, please just drop your questions in there. And at the end of the half hour, we'll chat about that. We'll answer them as best we can. Yeah. And if not, we'll just make something up.
So I'm showing our Synth Miner book, which we stopped mentioning it so much, but we should, because it's actually doing amazingly. So remember that massive drawdown we had back in whenever it was August.
Yeah, 30% market move down.
Yeah, we've recovered all that. We're back to 0.1012. So we've kind of doubled our Bitcoin this year, just under doubled our Bitcoin so far. And of course, we've also doubled the value of the book because Bitcoin's been roaring up. And this has been through utterly neglectful trading on my part. And whenever you've not been sick, you've been trading it just to get us out of the shit, right? But
well, let's face it, it's a small account, and we've got some bigger fish to fry. But we do our best to make sure we pay attention.
So here's us degenerating into being short the puts at 90k and 83k. On what date is this? 29th of November, so it's a week to run.
We probably did that last week, I think.
Yeah, they could easily get. I think we might have even swapped. I forget now. I think we might roll something up, didn't we?
I think so.
Who knows? I mean, they could be in the money in a freaking heartbeat. But what I was going to say was, so here we are. We're going to have to roll this today, or pay for it.
I think if you look at the delta, we're not too negative, are we? Because
No, I know, but I just don't like giving away premium. On a small prop account like this. We could roll. But to buy this back today, we'd have to pay 78 vol, which is outrageous.
Yeah, that's crazy.
So we might be better off just holding it and then selling. Well, I had to go 240 for it. I mean, 240. We could roll it. We could roll it up a week and up to 101k.
That's madness. Madness.
Yeah,
it's great.
Or we could roll it. Yeah, or 2 weeks because of this skew. 2 weeks. What's 240?
We might just want to let it expire.
106.
Morning,
probably. I mean, what we should probably do is sell some put against it now.
So, and it was my mistake because I was like because I thought we'd had futures, but in the Synth Miner we're not using futures, so that was my mistake. But right after this broadcast, I think we're going to do a live stream on Rogue Trader Academy. Check us out on Patreon, and we're going to manage this account plus 2 other ones.
But spoiler alert, I think I'm going to recommend that we sell a 0.2 of a put here to turn this into a straddle and then ride the lightning.
Okay, you give me fits when you do that, but fine. So let me just I'll share my screen. Or sure, was there anything else you wanted to talk about with that?
No, that's me.
Okay, because our topic of today, which we totally forgot, we got sidetracked as we tend to do, is we're going to look at the recent vol and carry action. But that when I wrote that, Bitcoin was still at 94 or 92 or I don't know who 90, 52. I don't know what it was, but it was a lot lower. But now that we're
a week ago, it was 87.
Yeah. Now that we're threatening 100K, it's probably. We can talk about the vol and carry, but we might want to also talk about that. Interesting though, a lot of times on the show, I'll talk about, interesting things, this day in history. And I was thinking, well, this day in history, maybe Bitcoin crossed 100K for the first time. That could be it. But also in 1901, one of my, I don't say he's my favorite composer, but Richard Strauss, he wrote an opera, which isn't my favorite opera at all, called Feuersnot. And I'm not super good at German, but it kind of means like fire apparel, fire danger type of thing. But, the last week I've been so sick, I've had my own vision of Feuersnot. That's the best joke I can come up with.
Oh, my goodness.
Anyways, let me share my screen. We're going to take a look at I'm going to take a look at the chart. Let me bring this up first so I have the right.
I was just going to look up. I think the monthly return must be 30% or more. In 2 weeks? 2 weeks is 30% or more in Bitcoin. It's quite a big month.
It's madness, yes. You can see my screen, yeah?
Yes.
All right.
Whoa.
So what I was going to say is, look at this. Let me go to the 4-hour chart just to go back in time. Look. This is the support and resistance and all this crap we've been looking at since March. With March, we stayed in there, and now a few times it had to be adjusted because we had some big moves down, which recovered, and it kept doing that. But this held true for ages, and it finally hit the unicorn, and I said, if it goes for the unicorn, it's done. So there we go. Now, the interesting thing about this is people say, well, what do we do at 100K? What do we do at 100K? Oh, my God. All those years as a prop trader, when you come to a big number, especially a big number that's never been hit before, i.e. like 100K, maybe in a stock, it's $50, whatever it happens to be. There's a few ways it usually plays out. Number one, now if you've got level 2 or, depth of market, what do they call it nowadays? Sometimes you'll see massive size at a particular level. And sometimes that size is real. Sometimes it's there for show, and it'll just blast through. Whether that size just gets pounded because there's so many buyers, whether that size lifts away a lot of it, and it just goes, and that's it. There's one chance to pound in if you're going to go long at that point, and boom, it goes up 10% or just keeps going. Who knows? The other way it often plays is it'll blast up through and then quickly retrace down quite a bit. And if it retraced down quite a bit in that scenario, if I was trading it, I saw it blast through the 100K and then quickly reverse, I'd be looking for it to reverse to the low 90s as a prop trader, as a scalper. I'm not saying it's going to happen that fast. Or a lot of times it'll hit the 100K, not break it, hit it, not break it, hit it, and eventually, boom, it's going to pop it, or it's going to reverse, one or the other. So that's how you play that. And there's no guaranteed playbook for that. It's just how it's set up at the time and who's there and what type of size and liquidity and all that stuff. But
so what you're saying is if it touches 100K, then buy strangles, right? Well, it depends on the
typically. Now, Bitcoin being Bitcoin, a lot of times it'll do a stupid move and then just go sideways for a few days, and your strangle is like, oh my God, I just see all that
bleed out. Yeah. Actually, that's a good point. If it hits 100K and stops, I would probably wait until like Tuesday or Wednesday and then buy strangles, because the vol will come out. People will forget. But actually, there's a massive expiry coming up on the CME, which people will want to be repositioning for, and it's going to definitely move somewhere as people reposition.
Yeah. We can look at ETH. Interesting little move here today. It's nice, big straight up candle. We don't pay a lot of attention to ETH. I know you trade a small ETH book.
Yeah, that is. I mean, so far it's been really kind. It's been giving me money, but I think that's probably cost me that little move. Let's have a look. Options ETH.
VIX hanging around 16, 17.
Oh yeah, that's painful.
Oh,
yeah. Why is that?
You can see the S&P here moving up. Pre-market.
Yeah.
The other thing I wanted to talk about a little bit here was look at this. Look at MicroStrategy. Oh my God. Come on. Sitting down here, 120, 140, 150, boom. Pre-market, it's up at 5.5 almost. Just massive. We have some friends in some of our chats just made gazillions off it. It's just ridiculous. A little bit of a bump up in oil with the stuff going on in Ukraine. Look at gold. Remember, I don't know if you remember, but I bought this pullback right here. Then I bought it again here. I got out of everything. The first trade flat, made a nice profit there. Those are scalps, but I know you're saying hold on to gold because you think it's going up. So who knows?
Oh yeah, gold is the Bitcoin for central bankers.
So I don't know if there's much else we want to talk about here. I was kind of hoping it would break through 100K while we're talking, but we've had a little bit of a pullback. But we'll see what happens when the market opens. But let's see where we're at.
MicroStrategy is up another $10 in pre-trade, isn't it?
Oh my God!
Yeah,
MicroStrategy. It's just. Well, we were making jokes before the show that we should leverage on the leverage, like use your Bitcoin as collateral to buy leveraged MicroStrategy, and then buy calls.
Yeah,
or maybe sell calls or sell a big wide strangle, because you said the vol is like 168% or something.
160K on MicroStrategy, yeah, and there was massive upside skew. So you could buy yesterday you could buy MicroStrategy for whatever it was, $515, and then you could sell or maybe less. I forget now. But you could have then sold a 600k call and bought a 400k put, taken a $50 credit, and so you'd actually have a collared position that could only lose you $50. That was kind of the where it was yesterday. I don't know what it is today. And you could do that in that was in December. You could do a ridiculous one in March. You could sell, like, buy the $400 put and sell the $800 call and still be protected on the downside and take a credit and have upside. It's mental.
Very interesting times, It's funny, that this market, Bitcoin, a lot of different altcoins. I remember not this summer, but the previous summer, how dead it was, and kind of waiting. It's like I often use the example of my friend who had a job as a guard at a federal penitentiary. And he said his job was 1% boredom and 99% boredom and 1% sheer terror. And that's kind of like trading some of these things. It's, when we're talking about people making 300% returns over a short period of time, or if they're leveraged, 3,000% returns, it's just insane.
Yeah.
Is there anything you want to talk about with the vol and carry though?
Well, we've mentioned the carry. So at the moment, the cost of carry in the perps is humongous, right? So I woke up this morning to see carry at 0.1%, so 10 basis points. 10 basis points is 0.3% per day, because it's charged every 8 hours on Deribit. So that's 0.3%. So if you, even without compounding it, multiply it by 300, that's 1% a day. It's so 100% a year. 100% a year without compounding, right? So you holding that long position for a month wipes out 10% of your capital. So right now, do not buy perps. If you really must be long, go long a dated future, and you're going to have to go out quite far because people tend to bid up the short dated futures first, right?
Richard, would you mind sharing the Deribit screen again? We can show people where the futures is, just in case they don't know.
Yeah, sure.
And you'll see everything's elevated right now, but the further out you go in time, the less interest you're going to have to pay.
Yes. So let me share screen.
Yeah.
Full screen. Share. I'll see that. Yeah. Okay. So if we go to the futures thing here, just click that. It gives a handy little summary of all the futures and what the current APR is on these futures. It doesn't tell you the APR on the perpetual. So the funding cost on the perpetual is now 0.3% per 8 hours, which is roughly 10 basis points a day, right? Is that right? 10 basis points a day, which is
10th Street. Yeah,
it's a percent. It's like 30% a year. So at the moment, buying the overnight future or the perpetual is about the same cost in terms of carry. But you're also going to pay the elevated price on the future as well. But if you come down here out to March next year or June next year or even just September next year, your implied interest rate actually comes down to 12.6%, which is still high. But if you must be long, at least be long that rather than this, because you're paying through the nose here. Unless your holding period is super short, in which case, whatever. But if you're like holding on for 150k, then you probably want to do it on a longer future.
Yeah, and if it's super short term, you're just doing it for a few hours or whatever. You're better off with the perps because it's much more liquid and tighter spreads. Yeah.
And I think on Deribit you do get charged per second for holding the perp. On some platforms, they actually only charge you at the actual settlement time, which means you can actually bed and breakfast them. You can trade out of them and back into them, which of course causes all kinds of price ridiculous, craziness around settlement time. But yeah, so that's
interesting stuff.
Yeah, and then we've seen the vol surface. So, I mean, you also need to be kind of careful. I almost feel as if you want to trade, be long the market, you're almost better off right now buying in the money calls because you're going to pay the least vol.
why don't you take a look at the end of the end of the month option chain? So let's just say someone was thinking, okay, well, is this thing going to blast through 100 and go to 110? Okay, well, let's take a look.
Well, where's the least vol? Actually, here's 60. Actually, at the end of the month, the least vol is actually at the money.
Okay, makes sense.
So at money calls are your cheapest way to get in. But bear in mind, 66% is not cheap.
Mm-hmm.
So you're going to be paying. Well, you're paying $240 per day to hold that Bitcoin. So
it's got to move, baby. It's got to move.
Coming up, yeah. Maybe if you go out further, let's have a look. Just into December, 62, 60, 60. So that actually the 88 in the money 88,000 calls are actually the cheapest in terms of
62. Mm-hmm.
Yeah.
Okay. Now, one of our members on our private chat group, Rogue Trader Academy, was saying that he uses fibs and different things. I think he was saying the next one is at 120 or 122, like 122,000.
Mm-hmm.
So who knows? A question here from Vladimir, and he says, why not sell heavily call spreads when 100K hits in this case? Now, I'm not sure what you're referring to, Vladimir.
But he's talking about your pullback.
My pullback. So what I do in this case is I say, okay, I don't know what's going to happen. So if it blasts through 100, how far is it really going to go? Let's say I'm trading, November 29th. Let's say it does go, boom, we go up to 104, 105. It starts to peter out. Vols are going to be through the roof. I should be able to sell, maybe a 20 delta or a 30 delta. It's probably going to be a 110 or a 115 or it's just something ridiculous. I'll sell that all day, every day, because it's not just going to keep going one direction forever. Yeah, I guarantee that.
Mm-hmm. I sold 130K calls today.
Yeah. I basically, all I'm saying is I wait and see what the price action does. If it busts, I let it run some steam out of it. If it's going to break through, then I sell the calls when, every man and his dog gets into the trade. Otherwise, if it fluffles about, or we talked about Bitcoin has a habit of moving and then going sideways for a while. I've got no problem selling call spreads. Maybe it's a 108, 115, or 112 spread. Who knows? It depends on what I can get for it. But I've got no problem in that case. Vladimir also says, yes, ETH finally rallies. Yeah. I haven't been watching ETH all that closely, really this year.
I think ETH has become a bit of a tail on the dog, isn't it? Because people are losing love for ETH because it's expensive as a chain, and all of the shitcoin issues are happening on Solana now, and Solana is the place to be if you want to be trading in altcoins and meme coins particularly. So ETH is kind of becoming the grandfather of sort of serious blockchain commerce, right? Because only institutions can afford to use it.
Only institutions can afford to use it.
Yeah, because who can afford to change 100? The whole point of cryptocurrency and smart contracts is that you can change $100 of USDT into whatever you want, or to send to your grandmother, or whatever, and it shouldn't cost you very much to do. But if you do a transaction on ETH these days for $100, you're going to chew up $20 in transaction fees. So the small guys can't do it. But when you're doing $1 million at a time, it kind of doesn't matter. So it's interesting to me. So I think ETH has kind of suffered from this narrative all year, where people are losing love for it, and Sol's got all the action. As for the future, I've no idea.
I can hear trades going off, Richard. I just looked and I see a bit of a pullback, so that's me exiting some of my futures positions.
Okay.
Taking profit on them, I should say.
Yeah, my auto hedges are wound up to have at a high frequency at the moment because we just don't trust this. And at the moment, I've got a policy of increasing the frequency of auto hedging around the US Open, and then decreasing it as the day goes on.
Yeah, Bitcoin really has become U.S. Hours dominated asset
in
terms of its movements. Now, sometimes yes, on a Saturday night, 2 weeks ago, we had that big move.
And this morning, happen. I mean, this morning's rally, it was just before expiry, wasn't it? This morning, Derby expiry. So kind of unsurprising. And there was a bunch of short liquidation levels there on the heat map, waiting to get taken out. And so it was obvious that someone would try for it. I just thought they'd wait till. I shouldn't have waited.
Shoulda, woulda, coulda, right?
Yeah.
Well, where's the liquidation levels now?
Well, there's none left on the upside.
I mean, on the downside.
The downside everywhere, all the way down to 75k. And if you scale back and use the 2 month or 3 month chart, all the way down to 50k.
Wow!
So if there is a scare, goodness me,
what an epic opportunity that'll be.
Yeah, but I mean, this what kind of scare is this going to be, right? To take the wind out of the sails of people.
Just before the call, I rolled some. I think they expire tomorrow. I think they're 96s. I rolled them to the December 6 102s or something. Flat trade.
Yeah. I understand why you did that. I think probably the right trade is to kind of hold on, but you don't dare, right?
I had a feeling. I was thinking, well, maybe I should split this order, but I didn't, because usually I won't commit to one full thing, but this time I did.
I'm
because I've been sick and not thinking straight.
I'm looking at liquidation levels, kind of getting big at 92.6. There's another fairly big one at actually 96.5. That could easily be taken out. And then
I'd love to see it pull back to the high 80s at least. That would be just brilliant. But,
and then the next major one is at 75k.
I'm gonna have to redraw my Steely chart.
Yeah. That'd be interesting, right? Because I mean, you've been absolutely right about the unicorn.
Yeah. Vladimir says simultaneously, ETH is a deflation coin. I think it's going to spike in the future when Bitcoin dominance will drop.
Could be. Yeah. I honestly have no. I've been trading markets for a long time, and I've seen the transition of markets from real markets to the degen Fed-backed markets that we got today, and have been the normal markets for almost everyone's lifetime on this call, I expect. And so I on the one half of me, I'm torn, because the right trade is probably never fight the Fed, keep on going with the money printing, just buy assets, sell puts, yeehaw, buy calls, and just don't worry about it. And then one day, something bad's going to happen, and that trade's going to go really bad. And I just don't know when. And this applies to meme coins, ETH, Bitcoin, the stock in the S&P, much of which actually is as much toxic waste as cryptocurrency, to be honest, in my view. And I'm kind of getting old, and I'm getting defensive. I'm starting to sort of scale out of risky stuff and scale into infrastructure, pipelines, shipping, contracts, stuff that people need to eat and heat their homes.
That's like the Mr. Burns trade. I don't know if you remember The Simpsons. Mr. Burns lost his fortune. He says, "I'm going to make it the old-fashioned way," and he phones up his broker, "Buy potash," and things from the 1920s, right?
Yeah.
That's you. All right.
Well, I think no matter what, people are going to need energy, and they're going to need food, and I think that as everyone becomes crypto gazillionaires, they're going to be willing to pay more for their food. Therefore, the price of food is going to increase. In simple terms, right? So, a few years ago, my brother-in-law asked me, "How do I get in on the crypto craze?" And I said, "Buy property," because crypto degens in the end have to buy houses.
Yeah, good point. All right, we have we're at the bottom of the hour here, so time to end the call. But we'll take one more question here. Got a question from Clayton. Hi, probably a newbie question. Is there a way to use your current P&L from open in the money options to buy more structures. There's no bid to take profit as they're deep in the money, so I'd rather not wait until expiry. So you're talking about long in the money options, I guess?
I presume so, yeah. To buy more structures. Well, if you're using portfolio margin, then you can just do it automatically. You'll the P&L implicit in that position will allow you to buy more contracts on margin.
It says long in the money options, yeah.
Yeah. So if you're currently on, shall I show you the?
Just show them where you can change your margin to make sure you're on portfolio margin, or if that's what you want.
Yeah. Entire screen. There we go. Screen one. If you go to, the margin thing is here. So currently I'm on segregated portfolio margin, and if you click this button, you can then change your margin type, and you can select whether you want cross or segregated portfolio margin. I actually can't change back. There's also a simple margin setting which you can have, which I think you get by default, which I can't change to because we're using margin at the minute, so we'd have to close all the positions out to change back to it. But you can change your margin type here. Cross. Sorry, I'm talking nonsense. Cross standard margin means that each position is margined by itself. Cross portfolio margin means each position is margined. All the positions are margined together, so all the P&Ls contribute to your margin availability, which gives you a lot more flexibility. And in cross mode, all of your currencies are interconverted into the one you hold the most of, and so they all contribute. So if you're holding Bitcoin, ETH, Solana, and dollars, that all contributes to your margin availability. In segregated, you've got the same options, standard or portfolio, but your Bitcoin and your ETH and your Solana are all treated as separate silos of risk. So you can change to portfolio margin. I think if you have enough money in the account, and then you can go as degen as you want.
Yeah.
Or you could just thank your lucky stars and wait for that option to expire. Or if there's no market to close it out, it must be really deep in the money.
Yeah, very deep. I mean, a lot of times, if there's not a market, I'll put out everybody's in the same boat who has those options.
Well, actually, what you could just do is
put out a ridiculous offer to sell it.
Do that. Also, just sell a future against it. Because if it's that deep in the money, it's Delta One, right? So you might as well just if it's one Bitcoin's worth, you may as well just sell one Bitcoin of perpetual, or
match the date,
or match the date. So one Bitcoin of future on the same date that the option expires, and both the future and the option will expire at the same time, and you'll have locked in all of the profit. And in fact, you get the added bonus that if the market does drop and it goes below your initial entry, your strike price, you'll still make money.
Yeah. So I hope you understand that, Clayton. Basically, you're locking in whatever price you sell that future at. You're going to lock in your profit now. If Bitcoin keeps going up, then you're not going to make any more because you'll be losing simultaneously on the future. So
what you gain on the option, you'll lose on the future, and vice versa.
Yeah, that way you don't have to worry about closing it out or whatever. You can let that option expire worthlessly. You don't have to pay transaction fees.
And the added bonus is that you'll pick up carry on that trade because you're selling the future at an implied interest rate, so you'll pick up the interest rate as well as the locking in the profit.
And just a quick comment on the margin. A lot of times, and you'll see on our live stream, which we do most days, a lot of times we'll, I'm not going to say manipulate the margin engine, but sometimes we'll have to do things to manage margin as some band-aids. So you can see that. Vladimir says, you should be very careful about selling or buying options deep in the money, which has a really short term to expiry, since the fees for those trades are ridiculous. They can go up to 60%.
Well, the spreads can be high.
Yeah, I don't really mean fees. The fee should always be the same, right?
The fee will be whatever retail pays 3.5 basis points. I think institutions pay 2.5.
Unless you mean something else, Vladimir. I'm not sure. If you mean something else, just type it in there. He's saying no. He's saying we're wrong.
No.
Wouldn't be the first time I'm wrong. Please explain.
Fees are really high.
Fees are really high.
Do you mean fees or do you mean spreads? I mean, sometimes the spreads are high.
Spreads can be ridiculous on those in the money. Yeah. That's why I'll put out just crazy offers, because sometimes they'll get hit. Crazy offers.
They can go up to 60% of the premium. Not
60%. What?
Of the
This is new to
premium.
me. Yeah.
Well, sure. Okay, if it's really deep in the money, because you're paying the fee on the notional value of the trade, not on the premium, the net premium you're picking up. So if you're trading a deep in the money option, say 1 Bitcoin, you'll pay 3.5 basis points of a Bitcoin, and it might be that there's only 5 basis points of time value left in that option. So in that case, yes, you will be paying 60% or 70% of your time value, but you won't pay 60% of the premium of the option. If it's deep in the money, you'll be paying 3.5 basis points on like 90% of a Bitcoin, which is,
I think that's what he means.
Yeah, but yes, but you're right. Because I mean, but it's a good point, because the fees do have a protection for really low fee options. So options that are super out of the money, really low delta. If the 3.5 basis points came to more than 12.5% of your premium, then Deribit cap the fee at 12.5% of your premium. But the premium on in the money is enormous, so that cap never comes into effect. So you will pay a big chunk of your time value if it's super deep in the money. Not that it matters, because you've made a lot of money, right?
But in this case, if we've locked in, if we want to take profit now by selling the future, then you can just let that option expire.
Yeah. So yeah, and so he's right. The put is the same put will be out of the money, right?
Yeah. So for everyone listening, basically what Vladimir just mentioned, he said, but at the same time, same strike, same date put will cost you only 25%.
Yeah.
Cool. Yeah. Clayton says, yeah, totally makes sense. Just new to the platform to manage my exposures. Yep. All good stuff. Yeah. Deribit's got an interesting platform. They do things a little bit differently in some cases. But
yeah. Well, yeah. Although hand on heart, I trade three options platforms in crypto professionally, and Deribit's by far my favorite.
Yeah.
It's clean, and it's reasonably performant. And
yeah.
I mean, I've got some niggles, and I've always had some comments for the design team, but compared to anything else, it's really nice and clean.
It's the closest to a TradFi options experience you're going to get right now.
Yeah, at the moment.
And that's because if you come from the TradFi world, everything in the crypto world looks hokey and designed by a kindergarten kid. But they've had decades to work on this. In the crypto space, it's all quite new, and Deribit's definitely the best. Yeah, got some good folks there too. We like them.
Yeah.
I guess there's good folks everywhere. If I really think about it. What's he say? Vladimir, by the way, that's the reason why market makers do not want to make any offers into really deep in the money short time options.
Makes sense.
Yeah.
That is actually one thing that I don't like about Deribit, which is that you can't make a rebates for being on options.
That'd be nice if they, or even flat.
Yeah, and I did speak to actually Luke, the CEO, about this, and he said, well, that's because their ethos is that they want fairness for all. But the trouble is that means that you could never get super tight spreads, because market makers are always paying to be there. So there's always going to be a spread because they're paying, right? So they've got to cover their spread.
Yeah.
So it swings and roundabouts. Personally, I always would like to see lower fees. And I'd like to see lower fees for making than taking, but that's just me.
Yeah, and I come from the prop world, where sometimes on some networks you can get paid big bucks for making a market. So much so that it can stop the market in its tracks, because nobody wants to pay the fee, but you can make big money just kind of buying and selling at the same price. But that doesn't happen so much anymore. It's kind of an old dinosaur thing. But
the deal, when I first started trading options, I used to pay my broker £6 a lot, which was £6 for a 1,000 shares of FTSE, and then the dealer brokers would cross the trade, and if they crossed it inside the spread, they'd had a deal with the prime broker that the prime broker would give back to them half the cross. So everyone was earning out of it. Everyone was incentivized to do well by you. That's not the case in crypto. You don't quite have that same collaborative environment yet, but maybe it'll mature, right?
Last comment from Vladimir says that's why the book is empty there. Yeah, it makes sense.
Yeah,
expensive. It's expensive to be there. And that's why I'll put out ridiculous offers sometimes too. Or again, case in point, you can lock in with futures.
Yeah, I think locking with futures is the way.
If you want to take your profit now,
or you can lock in, most of your profit by trading at least trading a strike that does have a price.
Yeah, and there's nothing saying you have to, excuse me, hedge off that entire position. If you've got one Bitcoin of options, you can sell half a Bitcoin of the future on that day, and just say, I'm going to lock in half right now. And if there's still more upside, well, okay, great. Nothing's saying you have to lock the whole thing in. All right, we've run past our normal time of about 30 minutes, but a lot of great questions. Thanks, Clayton, new guy, joining us today. And we do this every Thursday, so perhaps we will see you all next Thursday. It'll be interesting. Are we going to be sitting at 100K? Are we going to be in the 80s? Or are we going to take a rocket ship to the moon and be 120?
Do a poll. Where we're going to be next?
Okay. I'm going to add. Okay.
I think we're going to be at 115 in a week's time.
By next Thursday.
Yeah.
I'm going to put 100K as the first option. 90K, a decent pullback, but not. If
you'd asked me this yesterday, yesterday I saw the perpetuals carry cost go down to 0, and I thought, oh, okay, the rally's over. But then I woke up this morning and it was 10 basis points, and it's still 3.
All right,
but maybe it is over. I don't know. It does kind of feel tired. Maybe this was the last push, right?
It could be. And 100K is a big psychological number. Came up, almost touched it. Could it not make it? Oh, it has a pullback.
And also, now that we should understand this. Crypto is now firmly in the hands of Wall Street. So there's so many derivatives on crypto, on Bitcoin now. There's the MicroStrategy, there's ETFs, there's options on ETFs, there's options on MicroStrategy. There's IBIT, not IBIT, whatever it was. Anyway, it doesn't matter. Anyway, the point is that, and all of those are only traded in Wall Street hours or pre-market, and Wall Street traders all go home on a Friday, and they want to go home with a positive P&L and not be exposed over a weekend. So, is anyone really going to hold an all-time high over a weekend? Really?
Well, you know the Wall Street guys have the junior guys on it, or someone in Asia somewhere. It's not going to be completely unattended. But are they going to be gamma positive? I suppose might be the
maybe But that means someone's gamma negative, right? Which means they've had to mark up the vol for the weekend. Or,
all right.
I don't know. I kind of get the feeling. Trader mentality is to close out on a Friday, right, and go and have a drink.
Tomorrow's Friday. I keep thinking today's Friday. Tomorrow's Friday. Maybe by the end of the day we'll have a sell-off. Who knows? I mean, we've had a little bit of a pullback. I don't know. I haven't. Okay, 97.5. Nothing really. It's just I shouldn't even call it a pullback. It's just part of a natural movement up.
So, we've blasted through what? I've been holding short call positions all the way from 77 up to here, right? And they've been blasting through. And don't worry, I've been delta hedging it. It's fine. And I've been gradually unwinding those into puts to avoid paying the carry. So I've been swapping them over to puts. But all those in the money puts are going to, or out of the money, are unwinding. And that means that the market makers on the other side of it are all deleveraging and de-hedging. And someone, the person that I bought my in the money calls from is short a whole motherload of in the money calls, all of which are going to expire, and then he's going to have to hedge the delta swing. So it could easily be that there's a massive sell-off after expiry.
It doesn't surprise me at all. This is a great time to buy some puts. There might be some people, I'm not saying you should, but that's what we do. Really strong markets, we always buy puts. Really weak market, we're buying calls because it's cheap, right? Insurance.
Yeah. And I do it by buying risk reversals. Like I say, I sell call by put, and I delta hedge that. I don't just leave it and hope. But it's all about buying the skew.
Yeah. So I just ended the poll, and the poll is by next Thursday we're going to be at 100K, basically flat, 90K, 10 grand down, or 110K, roughly 10K up. And 22% say 100K, 22% say 90K, 55% say 110. And I think you're just reflecting the market sentiment quite well here because the skew's still the upside. We'll see. But it's kind of, more evenly distributed than I thought.
Yeah. Well, it's roughly 50-50, isn't it? I think it's reasonable that it's 50-50.
I personally think we're probably going to be at 90. I could be wrong. We could blast through 100 and be at 110. Yep. But
I have that gut feeling too. Yeah. There's that gut feeling that we've come a long way, right?
We've come a long, long way. Yeah. Cor, one last comment here for Cor from Holland. Good to see you. It's been a while. All my long-dated calls are at big profit. I'm preparing myself for some downside plan. Good.
Yep. Start scaling out.
Call. Yeah.
Start scaling out. Go and enjoy your life. Celebrate.
Yes. You can't go broke taking a profit. Not saying dump it all here because it might go to 120. But I love scaling out of positions, taking some risk off the table. You feel good about yourself. Send your money. Send 10% of your earnings to your bank account. Take your spouse out for dinner. Drop the kids off at a babysitter. Give yourself a break. I don't know. Take them to Disneyland, whatever you want to do. Yeah. But do something good for your life.
And don't forget to settle your debts.
Yes, settle your debts.
Because you don't want to be in debt when the market's down.
Paul says 90K by when? I just arrived. We're talking about next Thursday. Are we going to be basically 10 grand higher, right where we are, 10 grand lower? It was kind of, most people are leaning to higher, but I got a feeling that, by the end of next week, we could be in for a bit of a pullback, and low 90s wouldn't surprise me in the least. I think that's more likely. That doesn't mean we might not flirt with 100K, or it might poke up to 101 or 102 tomorrow or this afternoon. Who knows? But I wouldn't be surprised. This has been a big run up from basically there's been no pullbacks since the low 70s, so high 60s.
I mean, no pullbacks since the election of Donald Trump. Let's face it.
72, it went down to 66, 67, and since then, 67, it's been nothing but up. Nothing goes one direction forever. I guarantee it.
And remember, mean reversion is a very powerful force, and it's a powerful force in markets for many reasons. But one of the reasons is that market makers have to get inventory back.
That's going to be the topic of our next call. So let's leave that for our next one. And Vladimir says 90K in 2025, definitely. Okay, interesting. A lot of people are saying 200K. Could be. I don't know. Paul.
Probably both, yeah.
I don't know. Is this our friend Paul, the Englishman Paul? Or I don't want to say the last name on the call. Or a different Paul. Anyways, Paul says, good. I sold short-dated calls above 100K against my March long calls and short puts.
Very nice. Very nice trade.
Yeah. Very well done. Dutch Paul. So we don't know you yet. Good to see you. All right. I think we've wasted enough of everyone's valuable time for one day.
It's been a valuable respite for me from dealing with the markets. I managed 22 books in our systematic strategy.
Is that it?
I've got this massive dashboard of stuff, which I can't show you because it's all under NDA, but I've got like 747 panels of instruments and gauges all going off. And I also go and scour through the books every day looking for little bits of risk I can take off and clean the book up and so on. And I've been doing that all day. And it's my life at the minute. Because every time the market moves, it creates more shrapnel,
Yeah, I think on our Monday members call at Rope Trader Academy, you were saying something like a few weeks ago. Vol went down to like 40 something, and you were thinking, should I just flatten everything and take
Yeah. Oh man, I wish I had. I'd have made 10% more this month.
Brilliant. Yeah.
But I actually had this thought, and I thought, well, no, we run a systematic strategy, and if I flatten the book and then vol goes down further, no one's going to thank me, So
that's right. What are you thinking, stupid? Yeah. So it's a no-win situation. So just stick with your systematic, and you can't go wrong, because you always blame the system then after that, right?
I mean, the vol sell-off after the election was massively overdone. I mean, people were just exiting their positions and going to celebrate, right? And then,
Good stuff. All right. Hey, until next Thursday, Richard and I think we're going to do a live stream after this for our members. For the rest of you, hey, we'll see you next Thursday, and happy trading, and let's see where we're at with the price of Bitcoin. Catch you next week, everyone.
Cheers, guys.